excited to be here, and I have never been more excited to introduce a panel, not only because we're all Cal grads, but also because this is a female founders panel. So indulge us as we go into diversity issues throughout this. But let me quickly introduce who we have up here. You should have picked up on the way in backgrounds for all of them. You can see the long list of really just phenomenal accomplishments. Directly to my left is Doreen Block, who is the CEO and founder of Poshly. She is one of Forbes 30 Under 30, so watch out for her. Next to her is Pauline Shen, who has been part of multiple successful startups that the total sales of that was $1.5 billion, while raising 2 kids and being a VP of engineering at Cisco. Then we have Laura Gomez, again, founder and CEO of Atypica, who has worked at Google, YouTube, Jawbone, Twitter, sort of you name it, she's done it. And recognized by our Democratic nominee for president, Hillary Clinton, for her work in the Tech Women program. So just highlights of who you'll be hearing from today. I've asked them in 3 minutes to share their journey from Cal till now. What were you doing when you were a student here, sitting in these seats or other seats, and how did you end up what you're doing now? So Doreen, we'll start with you.
Sounds great. Thank you so much for the great introduction. Thrilled to be back on campus. I graduated in 2010. I'm class of 2010. I actually left a semester early because I couldn't wait to start working, oddly enough. So I'm from Palo Alto, California. Came to Berkeley, started in 2006, and I studied business. So when I got on campus, I wasn't sure at first what I would be studying, but I was really happy that I went through the Haas undergrad program. And then after I graduated, I worked for a year in finance in New York City. So all throughout the time that I was at Cal, just some highlights of the kinds of things that I was working on. I was interning at Yahoo all throughout my college experience. And I also started a campus magazine here at Berkeley. It's called Bare Magazine, the fashion publication, if that's familiar. And 10-year anniversary, which is exciting. So I had at the time, a lot of passion for media, aesthetics, business, as well as technology. And so when I was graduating, I knew I wanted to be in New York City, and I didn't know what I wanted to do. But for me, and I think this is something that a lot of people at Berkeley can identify with, I just knew that I wanted to keep learning. And so I decided to get a job in finance because it was a space that I didn't have a lot of experience in yet, and worked for a company called Second Market that was famous around 2010, 2011, for doing pre-IPO share trading of Facebook. So they were doing all sorts of alternative assets, really interesting work. I learned a ton, and about 1 year in, I had this idea for Poshly, and couldn't shake the idea about doing big data for the beauty industry. So 5 years later, I've been building that company, and so proud to have taken it from concept, literally a whiteboard in my bedroom in New York City, to product, to revenue now.
Great, and just to fill all of us in, Poshly does big data for beauty companies. Mm-hmm. What does that look like, and who are some of your clients?
Yeah, so we are a marketplace business. So on the consumer side, people come to Poshly.com to enter to win free beauty products. So it is 97% women on the site. And
I'm noticing some guys in the audience pick up their phones though, so we might be changing those stats.
And then on the brand side, because we're sitting on all this data about beauty consumers, because in order to enter to win, you answer these fun, fast questions about yourselves, we have about 20 million data points collected direct from consumer, and we leverage that data after anonymizing it and aggregating it to help brands make better decisions about which products they should put on shelves. So we have clients including Walgreens, L'Oreal. L'Oreal's an early supporter of our work, and many other brands.
Awesome. Great. Pauline.
Okay, so I graduated class of 89. Yes, that's pre-internet, in case you're checking. So I think I was definitely less, I don't have a vision of what I wanted to do. I got to Cal as a freshman, LNS, undeclared. My mom's a doctor, so I thought, I'll do the pre-med thing. So I spent my freshman year taking all the chemistry, all the standard classes, pre-med take. And then some of my friends that freshman year summer said, hey, let's go take that introductory to computer science course. I think it was CS8 at the time, teaching Pascal. So that the course itself was fine, everything was great, but they gave us accounts, right? So you can do your little programming assignments and all. And I found email and talk on Unix. I thought that was the coolest thing on earth. It's really embarrassing because now everybody does that, but back then, no, that was not the case. And I found out after the summer that if I stopped taking CS courses, they're going to take that away. And I thought that was not okay. So I switched major, that was the solution. I went to computer science so I can keep using my favorite email and talk programs. I was sort of obsessed with connecting things, even back then. So I basically just keep looking for classes that would teach me more about connecting things, but there really wasn't a whole lot at the time. So obviously when I graduated in '89, I did my search for networking companies, and at the end ended up with kind of two offers. I was trying to decide between HP and a little company called 3Com, which doesn't exist anymore. And by the way, it wasn't that small. It was just small compared to HP. It has like 1,000 people. So my traditional Chinese parents tell me, you should go to the big company. It's stable, HP. And I thought, nah. I went to those campuses and I thought, I am going to spend most of my waking hours at this job. And I don't like the vibe that it's just a job, right? It should be something that matter, whatever you do with your waking hours, most of it, I should say. So yeah, I ended up going there and it turned out to be a great decision because 2 years later, the place blew up and then a bunch of people went and started companies. And that's how you get pulled in. And that was my first startup experience at Grand Junction Networks, which was eventually bought by Cisco again. Then I was hooked, right? The whole startup junkiness started. There's nothing more special than a bunch of people stuck in a place where survival matters, right? Don't fight about the small things, right? Because if we do the wrong thing or run out of money, that's it, everybody's out of a job. That was fun, right? Some of my lifelong friends was made in that very first company and then sort of been doing that ever since, 3 startups later. So, however, 2 years ago, I quit tech and entered the world of education. And honestly, bringing some of that analytics that we all take for granted in tech to other sectors. And it's kind of sad, actually, that more of us should do that because helping teacher with a little bit of analytics, it's amazing. You should see what they can do in the classroom with that bit of information. So that's what I'm doing now.
Love it. Thank you. Laura.
Yeah, so I'm class of 2001. And I actually came into Berkeley as an EECS major. Fortunately, I was not. So I was born in Mexico, but grew up in the Bay Area. And when I decided where to go to college, I knew I wanted to come to Cal, although I had gotten accepted into Harvard and Stanford. I got a full ride by an engineering firm to come here. And before I joined Berkeley, I had an internship at 17 at Hewlett-Packard, which was close to my house, in the software development department. And once I got here, I felt overwhelmed. So I decided, well, no, how am I going to be in this industry? I don't get it. Maybe I'm not as excited. This is the year that was Google was founded. So I should have stuck around, but I went and did development studies instead. But tech always, because I grew up in the Bay Area, tech always had it pulled me back. So after I graduated from Cal, I actually got my master's in sociology, and then once I finished that, I came and started working in startup land about 11 years ago. And since then, it's been a roller coaster. There's been a lot of, I went through the 2008 recession, which was for startups was really hard. And so sometimes although I was still in school when the 2001 bubble burst and then 2008 recession hit. And I am very appreciative of all the opportunities I've had. So after I had worked at YouTube out of the Google Brazil office, actually all the languages I did take here ended up intersecting with my career. So I ended up being an early Twitter employee where I was the head of localization, which means international product. Twitter now is 76% international. And I attribute a lot to our small team, and not just localizing translation on the UI into 50 languages, but actually the content of Twitter itself. After that, I traveled, worked at Jawbone, and then I was 2 years ago, someone asked me to be on a panel around diversity with the Reverend Jesse Jackson, heads of diversity for Facebook, Google, and the editor-in-chief of USA Today. And they were talking about solving the pipeline issue. And I said, well, we need to look at technology and ways that machine learning can help us with that information. And so that was the start of Atypica. Later on, I realized that there was a lot of fragmented data around how people hire. We don't parse the resume in ways that are meaningful for any of us. So my startup is actually doing sentiment analysis on how people apply. We don't just anonymize, but we also interrupt biases on how certain pattern matching occurs when tech companies hire. And we're starting off with tech companies and engineers because there's hard skills involved in it, but there's also a lot of information on how people apply. So if someone applies right now and the job that they want closes, they have to reapply in a month. So what we do is we just take that optimization technique. And we're proud to say we have some of the biggest names as our client, because not only are we helping the humans, the recruiters, we're also helping interrupt a lot of the pattern matching that occurs in hiring. And so that's where, and it's hard, really hard being a female founder. I think it's harder being a solo founder. So having been a solo founder myself and raising capital, that's one of the sort of moments. But I'm proud to have said that it has defined me, and it's one of the things that I really love about entrepreneurship, the ups and downs and the battlefield. Yesterday, I had forgotten I had this because yesterday I was at the office till 2:30 and I saw a Giants blanket underneath my desk, and I was like, maybe I can just fall asleep underneath here and shower at the gym. I didn't, I went home. But
Thanks for clarifying.
Yeah, I did go home, but this is how entrepreneurship looks like, especially when you're trying to do a big launch and a lot of things are going on. It's this. I did at least shower.
Love it. So before we get to the ups and downs, let's get into how did you choose to join a startup or to found your own company? Pauline, you said you were a startup junkie once you got in, but what was that decision-making process like? If we're sitting here looking, do I go to a big company? Do I join a startup? What's that thinking, thought process?
The first startup I ended up joining, like I said, it was a previous bigger company, blew up, and then some of my friends started. I mean, they were kind of my bosses and stuff. Then they started a company and they pull people in. So of course, usually the first decision is, I know these people. I really respect them. I like working with them. So that's one thing. But of course, there is that somehow in the back of your mind, you always think about stability. The funny thing is that now that I've been in it for all this time, I think at the time I probably didn't realize I was in my early 20s, like whatever, it's all good, right? But really, what I realized is that as an employee, you know so much more what's going to happen to you when you work for a small company as opposed to a big one. I don't know how many times when I was working for Cisco because we got bought and then the layoff comes around, no one knows who's going to be affected until pretty much the day before. And that's horrible, right? And if you're at a company with like 20 people, you know exactly how much money you have in the bank. When you'd be all out of a job at the same time and you would have anticipated it for a long time. I remember, so in a small company, things are very transparent, right? It's like a family. So to me, that was also another thing that I think people think about it backwards, that it's safer to go to a bigger company. Yeah. I feel like you're more informed if you're a smaller company.
And in another way, there's an element of stability with startups because you have the chance to accelerate your skills. And this is something that I've heard a lot from fellow young entrepreneurs too, where in a sense they're like, okay, I could be a cog in a wheel, so to speak. Instead, I could be VP of engineering at my own startup. And so suddenly your resume is VP of engineering, right? And so, and you're kind of forced to use your skills in a way that, in all sorts of ways, you know, also all of a sudden you're developing skills in HR related things because that's where you're needed. And so your body of knowledge, your skill set is so much wider, and that creates a sense of stability too. I think for me, you know, probably had I stayed in a more typical track, given, you know, a lot of the changes right now in the economy and in job prospects for people, I feel like I would have much less of a sense of stability than starting my own thing, knowing that I have, you know, all these skills that I've gained over the past 5 years. It does create its own sense of stability.
I wouldn't be an entrepreneur if I hadn't worked in a kind of big tech company, though. I think what I learned from the tech companies, and actually a growing one, right? Like there were 40-something full-time employees at Twitter. By the time I left, there were like over 2,000 or 3,000. Especially those skills gained, I think were important. By the time that I worked at YouTube and got acquired by Google, Google was like, I think now Google is huge, I don't know. But I think at that time there were like 15,000 or 20,000 employees. So I do think that there's benefits to having the skill sets that you see inside tech companies, especially if you're graduating. You know, there's a lot of perks, and like you need to pay off your student debt. But also, I think entrepreneurship is one of the most exciting and great. Don't go by the brand name of startups as well. When I was an undergrad here, I was approached by this company to intern and then offer full time. And then I was like, why would I want to go work for a search company? Yes, that was Google. So I was like, I don't want to, long story. I made it up with Twitter. But I do think that there's a lot of sexiness to go to either work for a big tech company, whether it's a Facebook or now a Slack or Uber. But I think there's a lot of value to go intern at smaller startups so you can understand the difference between both.
That is true, and I think my internships at Yahoo were very formative, even for those like few month bursts. But going back also to your question about what makes you start a company, I actually have a very different perspective from the team dynamic, because for me it was actually all about the idea. So, you know, from my perspective of being a beauty consumer, seeing that there were opportunities to optimize the shopping process, as I dug more into the details of the industry, that's what got me personally addicted to the idea of founding a company around that. So I think it can come from all different sides.
Really believed in the concept, wanted to see it happen, and the only way to make it happen was to do it yourself.
Yeah.
Love it.
And there is this element of inevitability too, where I felt like, okay, especially after talking with other people about it too, and people in the industry, it was like, okay, this is going to happen. I might as well throw my hat in the ring and help create this future.
Yeah. So we've heard stability coming from steady income stream to pay off student loans. It's also from information of knowing what might be happening in the company, as well as gaining skill sets. Laura, you mentioned entrepreneurship several times and sort of getting the bug and being excited about it. What is it about entrepreneurship that gets you going?
It's the greatest equalizer out there. When I do think, okay, so when someone tells me I'm trying to fundraise, I don't look at them as a male or this or that, or they have a co-founder, or they're in an industry I don't understand, sometimes bio and genetics. What I just, as a founder, you just ask them, how's it going? How are you feeling? Especially when you either fundraise. I was talking to an investor, a founder this on the phone earlier today, and he just raised Series B 26 million. And then I'm like, I'm gonna announce my round, like my seed round, which could have been a Series A next week. And he's like, I've been there, like let me know. And it's the greatest equalizer. I don't know him, I only know him through an email list, through our investors, but it is an equalizer. So whenever someone's like wanting to build something, and they're so passionate about it. I have a friend that's really passionate about delivering gas, and I was like, okay. But I think it's great that he's that passionate about it and wants to pursue this, and that's an equalizer that he might not get why I'm so passionate about, like, machine learning and job compatibility, or diversity for that matter. But it equalizes or how we are fundraising. And I've met some of the closest people I've ever had in entrepreneurship. I've been exposed to things that I wouldn't have, and it is the uttermost greatest feeling. I sit on the council of Forward.us, which was funded by Mark Zuckerberg, around immigration reform. As an entrepreneur, as talking about the startup visa, also talking about having been an immigrant myself, when I was a child, an undocumented immigrant. So like I'm both sides of the coin. And so I think the opportunities that have risen as an entrepreneur have motivated and have actually merged my Berkeley activism with my career.
Awesome. What are some of the biggest challenges, though, other than looking at 2:30 in the morning at the blanket under your desk, maybe? What are some of the biggest challenges? Doreen, let's go back to you.
So many. The other thing too, in terms of the startup bug, is it is really hard. I mean, we can't. Running a startup is really, really hard, and you are fighting for survival at every stage. There are so many different challenges at every stage too. I feel like the challenges that I had in year one are very different than what I deal with now. For example, in the first 6 months, it was like, okay, I have this idea. How am I going to get it developed? Who am I going to work with? So finding the team, building out the team. Then, one thing that you encounter, and this was definitely a growing phase that I went through with my company, where you realize that maybe the team that you started the company with isn't the right team for the next stage of the business. And going through that, especially as a young entrepreneur, where at the time I had this notion like, oh no, you get to the finish line with the exact same team that you started it with. Turns out actually that that's really not the case in the vast majority of companies. So going through that very difficult process of changing team members. Fundraising is so hard, and I hope we'll get into that more because I think there are really interesting challenges as a female founder in terms of fundraising. But it really depends on every stage. And then I would say more recently, the piece that I've been really excited to be mastering is on the sales side. So getting into the rhythm of like, okay, revenue generation matters. How do I get these deals done and start bringing revenue into the business? That was something that I felt like school didn't necessarily train me for, and it was one of those just real life kind of start demoing, get it done, that kind of thing. So it's been interesting.
All those, went through all that for sure. And probably for you guys, one of the things that maybe it's a slightly different challenge for them, like when I look to hire people, how do I, you guys are all obviously good students, went to Cal and all the good stuff, but what makes a person attractive to me, especially on an engineering team, it's someone that doesn't just, code in a very clean way or that kind of stuff. It's really applying a little common sense, right? Making a product, it's not just about how well the code executes, it's how does it present itself to the person who's interested in buying this product to solve a particular problem, right? So, and I find that the best engineers, sometimes they might be, great GPA, all of that good stuff, but can't build a relevant product, can't apply a little sit in the customer's chair. He doesn't just buy your product because he likes you, he wants it to solve a problem. Right, so think about from that angle, amazing products will turn out. And I think if you guys try to think of, it's almost like be a little human and also be an engineer.
Are you saying that they're mutually exclusive?
I sometimes am that way. So, but yeah, I think that would really make you the most important contributor.
It's the competitive landscape. A year ago, no one thought about this, right? Thinking about mining, applicant databases, machine learning. I wrote a Medium post talking about accountable and empathetic algorithms. When you take algorithms need to be accountable, for example, Airbnb algorithms and how they can help their product not be, their host not be, exclusive of certain racial groups. Or Google search sometimes doesn't get it because that algorithm was not held accountable by anyone or by its creator, or it had to be out there. So I wrote this Medium post, I put it out there, and about a couple weeks ago, a competitor raised $8 million, and verbatim stole some of the stuff that I had said on my Medium post, which I think it's interesting. I find it flattering. Also, everyone tells me that like it's going to make it easier for you to fundraise again because there's other fellow very serial entrepreneurs who have done this before, who are taking something that you have built or said and think that that's something that they should do. So I think that is the toughest for me because I just don't understand, but it makes me focus and execute better. And that execution, they can't take it away from me. They can take my content and my idea and maybe build a better product, maybe even better algorithms, but the execution will never be taken away from me. So I think the hardest part about it is that I have, in the past 6 months, I've had about 8 competitors pop up, and it's been really hard for me. I'm like, what? Like, what were you? Anyway.
But by the way, that's so bold to be talking about your ideas. And I think that is so important and something that I wish I could redo from 5 years ago because I was very guarded. I had that whole like stealth startup approach for like a year. And I was speaking with one of the classmates earlier, and I was saying that I even made my best friends sign NDAs, which is so embarrassing.
As a lawyer,
so
I get it.
embarrassing.
I appreciate it. As a layperson.
Yeah, but no need to do that. Seriously, I think there's something so powerful about being vocal about what you're trying to build. And my sentiments on the competition front have really evolved to be more like the advice that you were given too, where, I wish there were more people doing big data for the beauty industry because it'd make it so much easier to do the customer education piece. And so when I think something really powerful about startups in general is that when you're creating a new category, the more players you have, if that creates a bigger pie, it's really beneficial for everybody.
And having the confidence that your execution is going
Yes.
to take care of things.
Right. Let's go back to fundraising, because Doreen, you mentioned that, and Laura, you're like, oh, Series A, Series B. Demystify that process for us. If I'm sitting here knowing nothing, how do I get money?
Unfortunately, it's network-based. And fortunately, you have to ask someone out there. So raising seed money, the biggest need for female entrepreneurs are at the seed level, not at the Series A level or Series B because it goes more granular. I think only less than a dozen raised the Series A here in the Bay Area. For women specifically, for all entrepreneurs, it's getting that intro to that venture capitalist. Or getting an angel. The first is getting the angel that believes in it and gives you a little bit of money or enough that you can run your idea with from the angel. And then saying, okay, I need the seed money. The seed money, it's the validation. I kept all my, just like Airbnb kept all my rejection emails. Not necessarily because I felt that they were horrible. They were really very nicely written, like all explaining that they didn't believe this is a market, that they didn't believe that this would help traction. But most of it to inspire me. But there was one point where I gave myself a deadline and I said no more. And then during that deadline, I got extra funding and I met my lead investor. So each round is harder for an entrepreneur. It is literally harder for you to decide who wants to lead the round because they're going to be your board. They're going to be on your board. And then I was talking to a friend of mine in Friday who's racing a Series D now. And he was telling me, enjoy your honeymoon with your seed lead investor, and it is a honeymoon, and then wait, Series A still quite there, like it's like you will lose control on Series B of like the direction of your company. So I don't think that that's it. I've also guarded as a solo founder. If anyone out there ever decides that this is like you can't find a co-founder that loves this idea as much and want to do solo founder. As a solo founder, I had leverage to actually give away more of my company at my first prize round. So I still kept control. But I had to ask my lead investor to be on my board, so that means it's just the two of us. And so now, during the honeymoon phase, I'm actually bringing in a board member that I know would not so have my back, but will also tell me it's time to step away, and someone I've known for a long time. So I think it's deciding the board. It's that each time that you raise investment, it's a lot of intros. a lot of people, and I'm gonna end this question with this and turn over to the other ladies. But I decided because in my network, a lot of my former coworkers were VCs. I was just like going to go and talk to all of them. It's strategy. Later on, when I met my mentor, we put together an Excel spreadsheet, looked at the different venture capitalist firms that were investing in enterprise and data. And then I went and looked at each partner and see who in the partner. At the end, my lead investor ended up being Luck. I met him at a dinner. But this strategy taught me not to lose my time with there were times where I talked to the wrong partner at the right firm, but the wrong partner was just a disaster. I talked to the wrong firm. I didn't ask them where they were at in their fund, and their last fund was actually running out of money. So they didn't have money to actually invest because they have to invest. And so that happened to me a couple times. So I think the strategy helped me take a step back and not just randomly try to talk to any VC. I had to be strategic about which one.
That even if there's some chance involved, that strategy, it sounds still was helpful.
Yes, it
in keeping you on track and keeping a focus.
Yes.
Doreen, you were reacting as we went.
Oh my gosh, well, so much funding advice over the past couple of years. So Poshly has raised 3.5 mil to date, and that's over 3 rounds, of which one was priced. So I spent 2 years bootstrapping the business. What that means is that I had my own personal savings, some family money that was contributed, and also any revenues that were coming into the business, I just reinvested. 2 years. It was very painful, literally. By end of 2013, I had $85 left in my bank account. And that was the moment where I was like, something has to happen. We actually had a term sheet from an angel group, and my lawyers were like, don't take this deal. It is not the right move for you. So it was at this breaking point where it's interesting, sometimes the urgency kicks in. I had brunch with this VC that I met at a pitch event and was almost venting about just how frustrating this process had been. And I got a check from him for $35K. That kicked off this round because I'd been keeping in touch with investors. I literally, in terms of staying organized, was managing my fundraising efforts through Salesforce. Like I literally had like accounts, when do I need to follow up with people, what stage are they on, like all this stuff. And super strategic. And so all of a sudden, when we got this first check, that first check means everything. And then it was just this avalanche where I was looking to close only 300 grand at the time. And within 3 months, I had 750 from all these investors who I'd been keeping in touch with, and our metrics had progressed at that point. And so from there, it does become very milestone based. I think there is a lot of art to it, but what I found, I think especially being a female founder, you really have to cross your T's, dot your I's. I think the bar that we're often held to is much higher than some other founders that I see out there. But right now, for the next round of funding for Poshly, it's very clear what those milestones are. You need $100,000 of monthly recurring revenue. And so it doesn't even make sense for me to be really talking in details with any investors until we get to that moment. So it does get easier over time, but you just need that first check. And
the first check, and it also sounds like you stayed in touch with people.
Yes.
Like this is not an overnight thing. This is, I'm constantly networking, constantly staying in touch for conversation, for
advice. I mean, so I was 23 when I started the company. So I didn't know anything even about the beauty industry from an institutional perspective. So I'm really grateful to those early mentors. Angel investors are incredible because they're oftentimes entrepreneurs by background themselves. Really thankful to, for example, I have this one mentor who's now an investor who was the former president of Home Shopping Network, right? And so she invested not such a huge check, but the fact that I could lean on her advice and network is huge. So it's not just the check size, it's also the network. And don't take no for an answer. Always say, well, why not? And is it something that's fixable? Is it just a metric that you need to hit? If it's no because they're just not interested in the space, then obviously it doesn't make sense to send them super robust updates. But if it is just like, I want to see you progress a little bit more, then you should totally keep in touch every month even.
Awesome. Well, before I open it up to questions, I want to cue you guys up to be thinking of what do you want to ask these folks. 2 more questions. You've talked about mentors, both of you. I imagine, Pauline, you also had them along the way. How do you find these mythical mentors?
Mythical mentors. I think, I'm not really sure if it's mythical. I mean, you really just run into, I mean, actually probably two of my best mentors were actually my ex-bosses. And I mean, the guy I love the most, I love his quote, you guys should remember this. There's no such things as rules, they're just guidelines. I love that one. And he's like my best friend. So I think it's just kind of listen, you know? It's not like they pop in front of you and go, I want to be a mentor. You just kind of hear these things and go, wait, let me think about that, right? What does it really mean? And I think he told me this 10 years ago, and I still remember it. And on a daily basis, if somebody tells you, you can't do that, just like what Doreen just said, why not? Right? So if it applies to you, you know, there are good guidelines in the world, right? There are reasons why rules are made, but does it apply to you? I would say, so when somebody says something like that to you, just kind of, wait, I'm going to hold on to this guy. Right? I'm going to go back and ask more questions. I would say that's kind of how I find them, is just take a deep breath and go, oh, that was more than just a few words.
Yeah, and I think one thing that you don't need to do is say, will you please be my mentor?
Yeah.
You know, you can just make it organic. Yeah.
People just look at you and laugh.
Right.
Yeah, it happens. I was at an event at Facebook a year ago, and I was with this head of Accenture, and like we just had such good chemistry, and I was like telling him, making fun of him in some way, and then the panel ended, and this man came up to me. He's like, I've been an entrepreneur. I'm like, oh, great, thanks. He's all like, reach out to me. And so then later on, when I reached out to him, he's like, you know, I'm older than you, but from 1999 to 2004, I raised over $140 million in venture capital. And then, do you want to meet? I'm like, this guy knows something that I don't know. And so I met with him, and he ended up being my mentor. But like, it just happened organically. He's like, here's a spreadsheet I used, which is a strategic spreadsheet that I used 10 years ago. And it ended, and he still, I think when there were those times where I'm like giving up, I do not want to spend more money in the startup. Like, I think I need to do, and I was, and things happen is those people, it's mostly entrepreneurs that have been my mentors, and they come up because they understand if they're no longer entrepreneurs, their spirit will always be an entrepreneur. And so they recognize that in another entrepreneur and say, I've been there. Like, how can I help?
I think the chemistry just happens.
Yeah.
Because you click.
And I know we're all women here. I don't go and be like, I need to go find a female mentor that's been an entrepreneur. That would be great. And I organically did find someone that is part of my portfolio, my investors. But it wasn't my requirement. My requirement is like, who can help me keep sane in the middle of this?
Yeah, nice. We've been dancing around the gender issue for a while, so let's just go there. What is it like being a female founder? How is it different than being a male founder? Biases or opportunities?
I'm happy to kick off by saying that I think one thing that's really special for me about being a female founder is I don't think this idea would have started without being a female, because in the sense that men are highly engaged in the personal care category, don't get me wrong, but the whole idea started with personally as a beauty consumer just being confounded over why one foundation was better for me than a different foundation. And I said, wait, why can't the data tell me which one's better? And I feel like my unique purchasing habits inform that. And that's why we didn't get a company like that before Pashley came along. So I think the diversity of experience is really important, because then you get people making things for all segments of the population. It's really important.
I probably have lots of stories I can tell you about, I go to a meeting and people mistaken me being the admin and that kind of stuff. It's happened. But at the end of the day, I feel like it, to some extent, actually helps me, especially coming from an engineering background, because, first of all, you have to be confident, right? It doesn't matter what gender you are, and just speak your mind, right? Don't be afraid. And then the funny thing is, once you kind of prove yourself, you're confident, you can answer the questions and meet metric, all of those things, you actually get an extra little dose, I think, of respect. So that's because because there are not so many of us, right? So I think to me that's once you cross that initial, so you're not fetching the coffee, you're presenting. So then it's I think it helps. And now the latest thing that I'm doing with this Chinese reading curriculum, I'm coming from the angle of being a parent actually, and being a mom of 2 kids that's sort of gone through a curriculum that I'm just not too excited about, and taking decision to
problem.
Right, and I'm actually just saying, let's do something about this, just because probably not the biggest money-making thing in the world in education, but it's I think people respect me as a parent coming to do something about it to help teachers. So that's also helpful.
It's not a level playing field out there for female founders. Let me assure you that it is, given all the experience I've had, given the network that I had, and it took me about maybe 16 months to fundraise. It took me about 7 months to fundraise, but it was, the existing of the company was longer. It's not a level playing field, but I went and I decided that I have gone through more than fundraising. Being an immigrant, being from low income public school, coming to Berkeley, a lot of things have helped me become entrepreneur. I honestly have to say that there is a lot of biases on the other side. Someone that is a good friend of mine is Ellen Powell, and she's been a venture capitalist, and she's seen the other side. There's a lot of biases. We women as well, I think one of my fellow panelists said that we have to come a lot more prepared. Dot every I and cross the T's. There was one statement that someone said that female founders tend to not make as many declarative statements, and this is someone very well-known VC. It ended up being around for 2 hours that we asked 6 female founders. We asked him and several other VCs questions, and that women would come in and pitch and say, I think my idea is really great and we may be able, and whether it was the same idea, someone came in and says, the male founder would say, I know that the product that we have built will change this. And so there were declarative statements. And I remember when I was pitching, I would be like, I really believe that I'm onto something. And then when I stopped doing that, when I stopped saying, I know that I am, because I sold my company without a product. I just went up to companies. I'm like, is there a need for you to use something? They're like, yes. I was like, can I mine your applicant database? They're like, go for it. And so I sold something without a product, and that's when I realized that I have built something that I'm no longer building it, that I have proven success. So making the declarative statements. In the portfolio, my lead investors are True Ventures. They have over 150 investments, active investments right now, with only around 7 or 8 female CEOs. But they're open. I'm gathering with other female CEOs and saying, how can we open and make sure that the female CEOs get in front of the partners, right? It's not their biases as much as that they haven't had access to a network of female founders. So I do think it's not a level playing field. I do think that there are different challenges, but at the end of the day, if someone would have said a non-programmer solo Latina female founder would have gone over $2.1 million, which is the biggest raise that ever a Latino startup has ever gone in the Silicon Valley, would have done it, I wouldn't have guessed it would be me. But I'm glad it was.
Yeah. That deserves a round of applause. With that, let's go ahead and open it up to the audience for questions. Orange shirt, if you want to shout out your question, I'll repeat it so it gets onto video.
Or you can wait for me.
Okay.
If you all would state your name or background or just something interesting and then go on.
I'm Alex Newman. I'm an intending EECS major. I actually have a couple questions. A couple of you said you worked in big data, and what I've heard from some people in the Valley is that it's kind of a saturated market at this point, with a ton of people rushing into this field with huge potential. So how do you guys feel about the fact, like they said by the time I graduate and want to do startups, the market would be so saturated that it would be kind of silly to try to go into big data. What is you guys' opinions on that?
First of all, big data is such a catch-all.
Yeah.
So it depends what part of the stack they're talking about. Yeah. So I think if you're looking at like the infrastructure layer, maybe that's yeah. So that might be
Infrastructure's done.
machine learning applications. I don't think that's going away anytime soon. And then where I'm sitting is on the very far end of the spectrum that's like super applied, dealing directly with business stakeholders that are very low tech savvy. So, and I think that's not going away either. Watson, to me, for example, is like very early stages of trying to build that out in a really ubiquitous way. So I think it just depends.
Yeah, so I think you can hear actually all three of us have been, you can say we're doing big data, but we're not doing maybe what the term meant like 5 years ago, right? We basically are farming data to turn that into some meaningful information for the consumer, right? I'm in education, beauty products, recruiting. Yeah, so it's now turning, because we all understand what to do with data, how to use machine, all kinds of ways, right? But now make it more relevant for more people, more segment, different kinds of business. And I think that's not going to go. If anything, I think it's just starting.
Yeah, I completely agree. And it also depends on what stage, I think, of the data you're dealing with. For example, if it's in proprietary data collection, there is still so much out there in the world that has not been digitized.
Yeah.
So there's
Education.
Right, exactly. So there's that part of the funnel, and then all the way to how do you make it actionable? How do you create rich insights for people to make decisions?
Biology even. There's just
Can you limit yourself to one follow-up question?
Yeah, there's only one follow-up for sure. I also read this really compelling book about how in Silicon Valley especially, there's a huge focus on the amount of seed funding you get if you get bought out by a big company for a lot of money. But it was arguing that a lot of times growth for the sake of growth really just takes value from the consumers and gives it to the shareholders, and that doesn't really wind up benefiting the economy. You guys have raised some extremely large amounts of funding. I was wondering, how do you guys feel about that idea that sometimes maybe like the companies that get tons of money are actually maybe like not giving value to the consumers in the way that it was originally intended?
So many thoughts on this. That's a great question, and it's a very juicy question from my perspective, having spent some time working in financial services. I think there's a lot of trends, for example, around what's happening in the public markets, the fact that the public companies are under pressure to deliver not just anymore on an annual basis, but on a daily basis. And so this whole idea of time value of money has really accelerated in our socioeconomic kind of situation. So I think it stems from a really interesting macro trend kind of place. But overall, to me, there is no right way, there is no wrong way to build a company. And actually, this is one thing that I wanted to make sure to mention tonight, which is that however, you need to be, as an entrepreneur, in check with your own goals. And for some people, their goal is to raise a ton of funding. For other people, their goal is to employ a lot of people. The KPIs range significantly, key performance indicators range significantly from entrepreneur to entrepreneur. And so I just think it's important to make sure that your fundraising strategy aligns with what your goals are, and then don't listen to any other hubbub or buzz. Just do what feels right for the business.
Let's take another question. Yeah.
Hi there. Sorry. My name is Sam Yearley, and I'm in engineering undeclared. Thank you guys all for talking so much tonight. And one of my questions would be, as an undeclared engineering student, what really gets me excited is this idea of entrepreneurship. But granted that we have to declare a major and specialize on something specific, what advice would you have in building a team of people that share your enthusiasm for what it is you're developing that you can also rely on to form a well-rounded company?
I'll take that. I have recently just hired my 11th employee, and my head of sales started. He worked at LinkedIn and IBM before that. He just started last week, and before that, it was my CTO who came from a unicorn company, where he's actually came to Cal. He has like 25 years of experience. He led the NLP and machine learning, natural language processing and machine learning at this big unicorn company, and analyzing 70 billion sort of structured and unstructured data. Hiring him with like this validates on so many levels is going to be a key hire. I'm announcing him next week, even though like on LinkedIn, I think you can find out who he is. But I think finding the right team is the most important. I hired everyone for some reason, but this morning I had to have the difficult conversations with them because there was not a deliverable that I expected yesterday. And it was one of those frustrating because I love everyone in the team, and I said, you're the team that's going to take us to a Series A or to an exit, successful exit, or sell it, or go maybe public. But right now I don't feel like it. And so I had to be honest with them, but they accepted my feedback. We all held each other accountable, and I'm also building a culture of empathy not towards each other, towards what we can learn, towards our client. We're very client-centric. So I think building the right team is one of the things. It took me, imagine, 21 months to hire my CTO. I had to be the acting CTO and the salesperson, but it was worth it. Just like it was worth waiting for my investor, which is the right investor for me. It's worth. They always says, hire slow, fire fast. And so sometimes there's been some situations where I've talked to people and I said, do you think this is a fit? And they've been like, no. And I said, okay, well, what do you want to do? And we have a separation that's very friendly. They're still, they sign things, but it's really important to hire the right people. I do believe after this morning and everything, how we are handling that, I will get to series of funding rounds because I have the right team in place.
So really preparing skill sets along the way, and then as you're looking to build your team, looking for a fit.
Looking for a fit, looking for who, not what. I wasn't looking out there at like how many years of experience this person, what I wanted. So that's what job compatibility goes wrong. You list a bunch of whats. This is how many years. This is what you should have. You don't go and look for the who.
Yeah.
So you did definitely need to look for the who.
Nice. Let's go over here with the scarf.
Well, first of all, thank you so much. The four of you are inspiring, and from here we can all see you're super smart, and you have been courageous and constant, many attributes. So congratulations and thank you, you're inspiring. I'm Mariana Villalbazo, and I'm also Latina. I'm from Mexico. I've been trying to be an entrepreneur, doing here my master's at the Goldman. So I would like to ask you, would you start, if you were to start again, would you start as an LLC or as a C Corp, and in which state? Because I've been hearing you have to go for Delaware. No, you have to go for Nevada. And so that's one question. And another is, which program, like you were saying, Laura, you used Excel. Like if you were to start again, which tools would you recommend for us to start with a team?
Yeah, really practical questions. Let's start with incorporation, what structure.
I feel very strongly about this from a tactical standpoint, which is that if you are serious about starting a company, every law firm, I don't think this has changed in 5 years, every law firm that does startup law will do your incorporation documents for you for deferred cost. They may try to sneak equity in, so make sure you read the paperwork. They will, usually it costs like $2,000, something like that, and from their perspective, it's like control, find, replace on the names of the company, and they will file it all for you. You don't have to pay a dime until like 12 months later or 15 months later. They may even just defer it until you raise funding. So if I had to do it again, I would still definitely go with the C Corp, and we're out of Delaware.
Same here. Yeah, it just makes sense. It makes sense for tax purposes. My CFO finds it much easier because he's done other startups and he's advised the CFO services that I use have actually done services for Uber, Airbnb, early Facebook, and they've done this before. So if they go into a Nevada, which hasn't been the template, it's harder and it's going to be costly for you in the long run. We did C Corp Delaware, and it is definitely the way to go. You can do this through LegalZoom if you don't want to go and sign something with a lawyer to defer it. It's really up to you. And it's also up to the law firm to say, yes, we want to have you as a client, and defer fees.
By the way, to your second question then, if we can do a little show of hands, how many of you are using Slack? Okay, so that's something that didn't exist 5 years ago for me, and we are obsessed with Slack at my company. And because of Slack, to be honest, this is why we're now able to have talent globally. If you're not using that for correspondence, I definitely would use that. And then otherwise, Google Suite of business tools, email, spreadsheets, all of that is.
But were you talking about specifically using spreadsheet to try out an idea? Is that what you were?
Yeah, like ways to interact or communicate and set your goals in, like to get organized.
Oh, yeah, Google Apps for sure. Yeah.
Trello board. A Trello board, if you're looking to, some people use it for agile, which means just understanding where your development process is. We use Jira and Confluence.
Yeah, for sure.
But there's Slack and Trello.
Right. With that, we want to thank our panelists so much. They will stay up here to answer more tactical questions or any questions you have. But please join me in thanking our panelists so much for their insight.
I have to say one thing. Elaine asked a lot of questions, but she has a fascinating background and has worked with a lot of entrepreneurs and corporations. And I've said this before, she has conducted negotiations from everything from terrorist negotiations to people in a company just not getting along very well. So thank you, Elaine. And thank you all for really the most insightful, honest, and tactically helpful discussion. So come on up if you all have questions, and we'll be here for another 15 minutes.